Good afternoon, and today is September 28, 2023. It's a Thursday, and we are in the last trading week of September. And today we have a wonderful, trading day. The price action is very good to the upside. We have a right try idea, right? The right try idea. We want to go long. The reason why we want to go long because we saw the setup right, in the pre-market, right? Look at the setup right before the markets, right here. In the pre-market, we saw that, in the Asia section, or another word for the, ODR, which is after the market, is start from 6 p.m. 18 until I think into the 22 hours. And then the London, right? So the London is kind of in the range right there, but right after London, it go to check the sell side. So that give us some clue that it may, reverse today, right? That's the first scenario, right? If you bullish, but if you bearish, you say, oh yeah, it's take the sell side. That means is the market structure shift, right? So we can short them. That's the second scenario we have in mind. But we are favor the first scenario, which is it's just a sell side liquidity rated. You're gonna go up. Why we favor that scenario instead of the second scenario, which is market structure shift? Because we look at here on Wednesday, right? We see the huge move down and then the huge move up, respond quickly right there, quickly and very explosive right there. It's almost reversal right there. So that gives us an idea that the market is kind of oversold, which is the term that normally people use, that oversold. So if you use RSI, you can see the oversold, right? I believe RSI is relative strength, right? Indicate something like that, or the MACD for that matter is the momentum indicator. But if we look the detail, we see that the huge leg up right here, and this is a retracement before it make another leg up, right? And we see that even though it take the London low, but it did not take the sell side liquidity. If it break down, it take the sell side liquidity from here with huge displacement and fell gap, then we know that the market structure shift, right? If not, then we are still in the up move from in the short term, right? In the short term, we're going to be up move, which is we are trying to play a retracement trade for today, Thursday. Yeah, that's the mindset we go into today. And also another mindset we play into is that for weekly profile, the way the market move on Wednesday give us a signal that Wednesday is the weekly, Wednesday low will become a week low right there. So basically Wednesday reversal profile right there. And another factor play into today rally or play long is that you know, this week is the end of the month, and we saw on the weekly candle. Let's look at the weekly candle. We play the strategy open, high, and close, right? So this week will be the week that closed in the month, and the month so far is going down, right? Down close. Then we play the retracement trade, which is the close will be above the low. So that's three factors that help us to reason why we need to go long. Let's look at the weekly candle so we can see why it's that way, right? I mean the monthly. Where's the monthly? Right here. So here's the September, right? So it make the low on Thursday, and we believe that it closed above that. So that's an idea right there. So we play the strategy that retracement gonna happen on Thursday, because it's gonna try to close above the low. So that's the idea that we're going to trade. So basically, we're gonna check the screenshot right here and jot down some observation, right? So before going into Thursday, right, we have what? We have the very first factor that we are talking about is open, high, low, and close play for September monthly candle, right? By that we mean that it will close above the low. So that's the idea. And also we have, that's the first factor, right? The second factor, we have that Wednesday low is the week low, and also it's a month low right there. That's our three observation or three assumption or the thesis that we have why we want to go long. And the third factor we have right here is that a strong leg up, right? Strong leg up it's V-shape. V-shape. You can call retracement or reversal. Let's call retracement. On Wednesday PM section, right? You see, it's around, yeah, PM section, retrace right there. So keep those two big idea to go along. And I think another one more right here, we can see that right here you see that it have a, we see the buy side is equal trough, and then we see that right here it break. Basically we see the consolidation, and let's put it in the verbiage. So a consolidation, a consolidation. So basically this is consolidation. You see right there, consolidation, but it did not break structure, right? In this consolidation, we see what? We see the buy sell word trap and no market structure shift to the downside. So there's no market shift to downside. That means we gonna reverse all the retracement to go up. So that's the idea. So we have 4 key factors to go along. So for all of that, just to make the point that, you know, go long on Thursday. So that's how we come up with the go long Thursday. And our trade ideas turn out to be correct right there. That is how we look on the 5-minute time frame right here. Okay, let's take this screenshot. Right. And why we go long on Thursday. So that's the reason we go long on Thursday. Why go long on Thursday? So that's an idea when we see why we're going right there, right? Now look on the I think H1 1 hour time frame. Let's look at the 1 hour time frame. I think I have 1 hour time frame on the I have 1 hour time frame somewhere. It's not. I think I have it somewhere. I don't want. Okay, right here. Perfect. And like we said before, we have to put this setup into our playbook whenever we see so-called Wednesday reversal. So look at this, you know, I think we did touch this before, but do it again so we can have a good exercise for our memory or for our subconscious mind. So basically we try to teach our subconscious mind to trading right now, and our subconscious mind is good. Work differently than our conscious mind, so we have to take time and train it. So you see it's very symmetric right there, right? Symmetric, right? I think I said it right. I think it's called symmetric, right? Symmetric move. price action, believe. Let's see the image. Something similar, so we I think, oh, measurable. No, actually it's a measurable. Yes, measurable. Yes, I think it's measurable right there. Yes, right here. That's the symbol right there. It's called measurable, right? In this case, bullish, but in the other in our let's see, in our let look the one that have similar to our move. This is the reverse of our move, right? Our move is down move, and then this is up move, bullish. Yeah, let's do bearish measure move pattern. How about that? Bearish measure move pattern. Okay, where is my pattern? I want a very simple move, exactly like this one. Why it only? Okay, so right here, just take a look at this one. Right, it's basics. You see the D right, and then the consolidation there, or right here is a we will drop right there. That's the we could drop right there, and then it move down right there. So that's what I want to show real quick. So yeah, basically right here. So they call it flag, but basically it's a sell side liquidity will drop and then boom, go to grab another one. And then you see, right, all of these sell side will drop, and then how do the market switch from sell side to buy side? It's gonna trap the buy side. You see, here it trapped the sell side, and now it switched to trap the here it trapped the sell side, and here it trapped the buy side liquidity. You see, drop there. It never violate this one. Okay, if it violate this one, it will no longer in the bullish pattern. So it don't violate. It could, but in this case, it don't. So what's the low of this one? I think this one is just about 4 cents above this one. So a low of this one is what's the low? 424.86, right? This one I think is 81 something. Yeah, 87. Can you read that? Just 1 cent above. So this morning in the pre-markets we identified level, and we didn't follow our initial. So that's the thing we need to working on right there. So we have the right trade idea. We're gonna go long, and we identify the entry point. However, when we actually enter the trade, we didn't enter at the location that we're supposed to do. So what really happened there? What really happened there is that we have so-called FOMO, fear of missing out. We jump the gun. We don't wait until it gives us a... No, actually right here, this is the pre-markets, right? the entry is pre-market, but at the when the market open, we have the good entry right here. And what's the low of this one? The low of this one is 32, right? And what the low of this one? 25. I mean, how accurate it is. 32. So about 40 cents, right, around there. So if we miss the entry rate because it's pre-market, then we have a second entry right there. That's what I'll say. But actually, we are entry a little bit too early, and we put a stop loss too tight, and we got kicked out. So that's the lesson we learned. We make some a trading error right there. We don't follow our rule of entry right there. Or we put a stop too tight, or we fear missing out. We jump the gun too early right there. But go back to this point I want to make real quick, that we have a very good setup right here. So we're gonna take this pattern and we're gonna trade this pattern in the future when it show up again. So when's your reversal right there? So we have a measure move, and then we have a sell side liquidity trap in the pre-market, right? So that is our setup. And another thing is, yeah, we need to put in here, right? So what you call this trade? It's a long setup, right? So we can go Wednesday, reversal. Oh, yeah, it's a reversal. I kind of want to try retracement also, right? Because down move and then retrace, and whether this retracement gonna turn into reversal or not, or it's just simply a retracement and then continue the downtrend. So that is the one we're still working on. We're not solidify the verbiage yet, so to put it in here. Long setup, okay? So for high probability, so it should be the last trading week of the month, or of the month, right? You want it to be the last trading week, because you want to catch the retracement when it's closed. Normally it will be above the low of the week or low of the month, right? So that's the whole idea right there. You need to have this condition, right? You need to have that condition in here. And we have measure move. Yeah, we have bearish, which is moving down. Measure move. On Tuesday and Wednesday, right? That's the condition we need to have. And pre-markets, Thursday we have what? Pre-markets, markets. Thursday we have what? We need to have a buy side river trap. And have to be no market structure shift to downside, okay? to the downside. You have to make sure that, otherwise it will not working. Okay, yep. And then that means that we will go long on Thursday. Go long on Thursday on the retest. You have to looking for retest. Should be around 10:30, right? That's happened today. 10:32 today. Yes, so that's the overall idea right there. What I will need to put in here for our next, opportunity when it's so up, we know. But it's the huge move right there. Oh, you see that it takes out it's sell side buy side right here. So how do we define our targets? So how do we define our targets? Maybe we trail a stop loss, right? Today the target is about $4.67. It's a huge profit right there. Okay, we almost run out of time, so I come back to how we define the target for this, but right now it's good enough for now. All right, you see right there. So that's it, a beautiful setup for it right there. It's a Wednesday reversal. Wednesday reversal long setup, and also open, high, low, low close, and up one. So that's the setup we have right here. Yep. Okay, we have 2 minutes left. Let's go back to the trade that we execute. We execute a new trade today on 1 hour time frame. So the idea that we go along right here, right? We see the sell salary were rated and buy salary were trapped up here. So we quickly jump in here. It's not at 339. We feel like a mixing out right here. I remember that feeling. And draft and stop lot is just 5 cent blow here. Even though we identified the sell side liquidity is way below here, but we go in here because we have a formal issue problem that we need to work on right there. So to take a practice, today is a huge lesson for it right there. We continue working on that right there. So we have a right try idea. We identified the right level to entry, but when we execute the trade, we failed to do that properly, and that's what we're working on. So the same right here, we see the buy salary make equal low, the equal high right there. That means it dropped the sell side, buy side. So we know for sure that it's gonna go up, and you see this level is respect this level. this is a 5-minute time frame right there. If it does break down this level, so that you can then go along, and the target is equal out right here. But actually, you see, if you let it run, it's gonna be it did go huge right there. We got the stop loss not hit, right? We're going right there. Go ahead. We should wait, patient wait, because this is another retest right there. You see the market's really sick. It worked beautifully. You see, we should be patient. We're waiting for this. I think it's 1-minute time frame. This is the best entry right there, because half the order block, very clear right there, and huge. I mean, a very obvious fair value gap right there, and the retest right there. So it's the best entry is 1032. It fit well with our level right here on the 1 hour time frame right there. That level is right here. You see the level right there? That is the level on 1 hour time frame. And yeah, right here also on the 5-minute time frame. Okay, so if we go in around here, then we're very close to our stop loss. That's the best right there, and we reach how much we reach? Yeah, we reach about 40, let's say 50 cents right there. And our target is huge from here to here. Is $4.80 right there. So you see, that's a huge trade for it right there. But anyway, I ran out of time right now. We can wrap up here. Oh, what's that? All right, we can wrap up here and talk to you later. Thank you for your time and interest. Bye.